Hi everyone, welcome to the PBWM Hot Seat. This is the Regulatory Compliance and Risk Edition. And we are going to answer one key question, which is 2026, what are compliance leaders' priorities? More in practice, not in theory. And to have this conversation with me, we have Tina and Johannes. Thanks a lot for joining me. And Tina leads the regulatory advice practice in Europe and in Switzerland. And Johannes is focusing a lot more on topics around CLM, AI and compliance, enablement around data, and everything to do with technology and compliance. Really happy to have you on board.
Thank you.
Thanks.
And now to get the stage started, maybe if we can start with you, Tina. So what's in store for us in 2026 in Switzerland and in Europe? Maybe if you can get us started there.
Sure, I'm happy to take your first question. But first of all, Prasanna, it's great to have you here in Switzerland in our Zurich offices. And then back to your questions, regulatory priorities, Switzerland and Europe. I think what comes to my mind first is the new anti-money laundering regulation in Europe, which introduces multiple new requirements around risk assessment, client due diligence, reporting, but also new group-wide measures. And actually the group-wide measures are quite an interesting topic because, amongst other things, they require banks to establish a global single client view, which means that banks going forward, they need to consider client data, risk-relevant client data, across all relationships they have with a person globally for risk assessment purposes. And that includes, for example, client data booked in foreign branches and subsidiaries. This is, I think, a genuinely new requirement, which I have not seen in any other regulation so far in that way. And I think this will significantly impact and change the way that banks process client data from today pretty much a relationship by relationship level, and the focus will shift to a client and person level. European banks are more detailed obliged entities in the EEA need to implement these new requirements by July next year. But also banks in Switzerland might be impacted by the European AML regulation, for example, if they are part of a European banking group. Mm-hmm. So I think that's really a new regulation or a key priority for banks next year. Talking about Switzerland, Switzerland will later this year introduce a beneficial owner register as we know it from Europe, from the EU. And Switzerland will also introduce an electronic ID, the eID, which I think is quite good news because what we are observing is that there is an emerging risk of deepfake fraud in client onboarding, in online onboarding. I think if the eID is developed in a secure way and it's adopted by the people, then this could be a good measure against fraud in online onboarding. Mm-hmm. So two structural changes in Switzerland. And on the regulatory side, when we think about AML, at the horizon, what we expect to see later this year is a revision of the AML ordinance by FINMA, and also a revision of the CDB, the Swiss due diligence standards by the Swiss Bankers Association. Both we expect in the second half year. So I would say that's it from a regulatory perspective. When we speak about AML, I think other priorities continue to be the strengthening of the AML risk framework for banks. Key topics remain risk assessment on a group level, on a relationship level, both interconnected, of course, and also the strengthening of KYC controls. Most important, source of wealth procedures for source of wealth documentation and corroboration. I think those are the priorities from an AML perspective in Europe and in Switzerland for 2026. But tell me, what does the picture look like in APEC?
Asia, and Johannes, I'll come back to you on the CLM topic, source of wealth data. But before we get there, Asia, what's happening in this space? It's actually the topic around AML is still prevalent. Back, I think, 2 years ago, the AML challenge that I think Singapore, for example, as a market had, has now structural uplifts in terms of the expectations coming from the regulators. So they expect consistency and sustainability in the data that you collect. How do you do your risk assessment? And it's just not on an ongoing basis. They look at it even the existing client books. So to really get it up to the standards that the regulators are expected is still one of the themes. Probably I'll complement a bit more when we go into the topic around the CLM data and AI, because that's also quite an interesting space that's happening in Singapore, where bodies that are being created like Project Mindforge, where there is a bit of a forward thinking on how do you actually go about handling such things. So that's quite interesting. Outside of AML, I think the theme generally is going towards more supervisors. How do you make people accountable, especially people who are making decisions? So really ensuring that the accountability stays at the top is one of the key focus areas, which then pushes a lot of decision-making, transparency, risks to be made visible to the people who are making decisions. So that's more a structural shift. That's just not across AML, but seeing across the entire landscape. So probably these two, and I'm sure there is a couple of more that we can touch along the way. Throwing it back to you. So what else is happening outside of AML?
Regulatory priorities beyond AML, I think, let me start maybe with ESG risk management. ESG, stands for environmental, social, governance risk. And here we have received new regulations or regulatory expectations last year from the EU regulator and also from FINMA. So in Europe, there was an extension of the Capital Requirements Directive, the CRD. I think it's number 6 now. And the EBA, the European Banking Authority, has also launched comprehensive guidance on ESG risk management. And also in Switzerland, FINMA, they have articulated their expectations in a circular on the management of nature-related financial risk. And if you look at the two documents, at first glance, they look quite different titles, of course, different lengths, but in substance, it's pretty similar what banks need to implement. It's all about extending the existing risk management frameworks by ESG factors, and the focus is really on the E, environmental risks. So it's about considering the impact that environmental change and related transitional processes have on the traditional risks of banks across their risk taxonomy, be it the credit risk, the market risk, etc., etc. So that's what banks need to consider and to implement. It's actually that large and complex institutions already had to implement these changes last year, but the majority of banks are currently ramping up their projects because they have time until January next year to implement the new framework. So ESG risk management is an implementation topic for banks in Europe as well as in Switzerland for this year.
Got it, understood.
Another topic which is important for European banks is MiFID. MiFID again. So the European regulator introduces stricter rules within MiFID for the suitability, for information disclosure, inducements, etc. There are new concepts being introduced, things like value for money test for PRIPS. PRIPS regulation is amended as well. Everything becomes digital now. So more changes here. We have not seen a final level 1 regulation. We expect it for the next couple of weeks. And then, of course, ESMA needs to release technical standards later this year. However, we know how difficult and how much effort it is to implement MiFID requirements. So my recommendation to the compliance teams is watch out, monitor developments, and once the technical standards are out in draft, start ramping up projects to be ready then when the application date is. We expect that at one point in time in 2027. So that's for European banks and Swiss banks actively providing investment services into the EEA. The third topic I would mention is changes in fraud risk management. The European regulator is changing payment services regulation. We have a payment services directive, the number 2, PSD2, that is being replaced by a payment services regulation. There's also PSD3 now, but relevant is the regulation. And that's introducing new requirements for fraud risk management, for example, new payment screening requirements. And here, the relevant legislative bodies have agreed on a final text. Last year, we haven't seen it. We expect it in due course. Then we expect also some technical standards or guidance from the EBA. And again, here my recommendation is monitor the developments. And once you have the draft technical guidance, start ramping up the projects, because changing transaction monitoring and screening, we know how much effort that is. So I think to summarize, what you can say is that 2025, last year, was probably the year of regulatory change in terms of new regulations being drafted, negotiated, new rules being introduced. And 2026 into 2027 will be more the year of implementation, of course driving compliance costs. So it will be key, I think, for the teams to focus on smart control design and on digitalization. And I think that's a nice pathway, Johannes, to the second part of our discussion.
Thanks a lot, Tina. So still quite some action happening. And by the way, scams and fraud topic is still a thing in Singapore, but it's already been there for the last 3 years, still not yet fully mitigated, and still continues to be the focus. Now, pivoting towards the more technology-driven CLM AI source of wealth. Johannes, if you can just maybe share with us on what's keeping you awake, and where do you see action happening in this space?
Yeah, interesting. There's a lot happening, because I think they all realize that CLM is not just a workflow tweak. So it's really relevant, and you need to challenge your current operating model. So how are you operating? And you will also realize that data become much more important. So not just the availability of data, also that you need to ensure that you have all relevant data available. And for that, you mentioned it already, the single client view, which will be required or in minimum requested and hoped for. That will be the big challenge for quite a few banks. They have cross bookings, they have different platforms. They need to work on how to ensure that you can aggregate data. So you have to put data layers on top. And there you also need to have clarity around on who owns the data, who is responsible for maintaining the data. So CLM still has to ensure that you have a good client experience. But now it's also the robustness of your data underneath, which become much more important, especially if you try then to also beef that up with AI tools and analytics.
Now, that's what I was going to ask. CLM is not a new topic, right, for us. So the question is, what exactly is putting the focus? What's the angle that has changed, which did not exist, say, 12 months ago?
I think the pressure, which is coming from the top, also on costs, because I think we can't just be bigger and more expensive. I think now we also have entered the phase where we need to be smarter, where we need to ensure that we have a 360 view on a client in order to do a case management rather than solving all isolated alerts and issues. This is what pushes compliance departments to rethink the way they operate, the way they can use existing systems. I think we are not at the point where you need to rethink radically all your toolings. I think you can work with existing tools. You need to enhance them, and where possible also think of use cases where Gen AI can add a value, where they can do something in the background in order for analysts to have a comprehensive view on the risk of the client, and then to really act and see the risk and manage the risk rather than isolated, start working on alerts and single events.
Got it. And maybe diving a bit deeper into the topic of AI and Gen AI. I think it's already been quite some time that we've seen experimentations, POCs, and everything happening in the space of compliance. What are the lessons learned? Where have this gotten us into, and where do you see now the biggest potential? Because if you're struggling with the basics, which is data, how do you even get started?
I think you need to have a clear governance, but governance is a nice buzzword, as I will call it. You need to have clear ownership. You cannot outsource anything to a model or to a vendor. So you need to be in the driver's seat, you need to understand, you need to change the role of compliance. We had that in a previous conversation already, where you need to be data analytics skilled compliance analyst, rather than just working on isolated cases. But we also see more and more you need to have the evidence afterwards. So you need to prove to regulators, isolated of the head office view or the vendor, how you are doing it, who owns the data, who owns the process, and who is responsible not just for processing, also then afterwards for the result. So you need to keep the human in the loop. You can't just replace everything by an AI tool, but you need to use them smartly. As said, you can't spend money and money. You need to be smarter and therefore also then much more to the point.
Got it. No, I can also relate quite a bit to this, simply because if you have seen the paper that even was released by MAS, it's a consultation paper that's gone out, goes in a very similar direction, right? They talk about accountability, they talk about materiality concept, they talk about decision making in terms of how do you actually use certain things, but at the same time not kill innovation, right? So I think the most interesting part that comes in is if, especially around complex topics around source of wealth, which I think is probably one of the most challenging topic to solve, but at the same time, that's something that most banks are now trying to use AI to solve it. The challenging part is not because the topic is complex, because the decision environment and the judgment that you need to use in space is not anywhere written down, right? So translation of this and translation of judgment, the environment, how do you actually make decisions becomes quite a crucial point, which is not a challenge that the AI team will solve, but actually compliance leaders will solve, which exactly goes into the ownership, accountability in the domain, and which goes back to the business and not necessarily somebody in the data team that takes ownership of this. It's a very valid point.
That's exactly where AI will play a very vital role, because an important role. They can help the analysts, the ones who have to take the decision, to have a comprehensive view and to have done the groundwork without wasting time in Googling, in looking through different fragmented systems. So they should really have it at one spot.
Understood. So Johannes, now to focus precisely on where exactly is the challenge that banks are facing, and let's be as pointed as we can and maybe address it.
I think the biggest challenge is they have everything already. So they have the tools, they have the target operating model, they are compliant. So why should they change? And now this is the very important point where they need to zoom out and look at from a complete different angle. How do I need to operate in 5 years' time? What would be the expectation from clients, but also from regulators and from the organization? And they need to first refine the target operating model, think concretely how different tools will be used. You mentioned EID will come in place in Switzerland. So the days where we do passport copies will be over. You need to have a flow where you can tap with an NFC-enabled iPhone and then put your identity towards the bank. So we need to radically rethink. And there I see the challenge that they are not able to zoom out from the current TOM and the current systems to have the view what to change and how to change.
Well, with that note, Johannes, I think we're we've spoken enough about technology, AI, and data. So before we close off the section, maybe one sentence each, both from you, Tina, and from Johannes. Tina, maybe over to you.
Thanks, Prasanna. I come back to what I said initially. Monitor the regulations, start early with project work. Think about smart implementation, leverage what you already have in terms of control frameworks, and look at technology. Don't shy away leveraging AI where it makes sense.
Thanks a lot. Johannes?
My advice, and what I'm currently also advising banks on, is zoom out, take the view what will change in 5 years' time, and then start with POCs, small little steps, use the new technology, get familiar, and then take it back into your new target operating model.
Thanks a lot, Johannes. Thank you, Tina. And hope you enjoyed, to the audience, hope you enjoyed the conversation. Look forward to your feedback. And that's the end of the segment. Thanks a lot for listening, and thank you, both of you.
Thanks, Prasanna.
Thanks, Prasanna.